U.S. Treasuries took that.
Listen up, Rebels. Rebel Leader here with another episode of Bootstraps Bootcamp. Today we're going to talk about the importance of goal setting. Setting goals for yourself in order to succeed and track your progress and hold yourself accountable. Now this is more focused in the stock market, but you should also take this to other areas of your life. The first thing you're going to want to do is set a goal for what you want your stock market account to be after 1 year. Now this is based on a few factors such as 1, how much money are you willing to put into it throughout that first year? And people get it wrong. It's not putting all of your money up front at one time and then wait a year. That's just not how life works. That's not how your job works. People get paid every 2 weeks via paycheck, and you're gonna wanna keep putting in a set amount of money every 2 weeks or every month. The key here is consistency, and that's actually a surefire way to increase your stock account. So now that you've thought about the short-term 1 year goal, I want you to think deeper using vision about how you want to see your stock market account in 3 years and 5 years. Again, it's these long-term visions that's gonna hold you through in the short-term volatility, and quite literally will be the light at the end of the tunnel if you're feeling unsure or uncertain about what's coming next. Now, after you set goals for your entire stock market account in both the short and long term, I want you to take a look at the individual stocks and companies that you're holding. It should generally be between 5 to 10. If you have more than that, you're holding too much. You don't really understand each company and you're not really invested in them. And this is why price targets are very important. You're gonna wanna know where the entry price is of these stocks and where the sell-off points are of these stocks. Because when these stocks have hit the high values that you've placed on them, and also other analysts have placed on them, it might be time to sell them based on how you see future growth. There might be other opportunities in the stock market that you can take advantage of after you close out a position. You know, the stock market is constantly evolving. There are periods of time that certain stocks will be stagnant and other times that certain stocks will see explosive growth. And you kind of have to play the game and keep cycling through these stocks. But likewise, if a stock is underperforming your valuations for you to reach your goal in the both short and long term, it might also be time to think about switching money out of that stock into another opportunity. And if you have nowhere else to look, the first thing you should be looking at for price targets is actually the Wall Street analysts. They run a bunch of different numbers and scenarios based on assumptions. They're not always right, but they have a good sense of where the fair market value is of stocks. And that doesn't always hold true over the long term, but you can kind of get a sense of where to begin. And of course, then comes your bullish thesis and what you actually believe the company can be in, again, the long term. And when we talk about goal setting, you should be setting achievable goals. And by that, I mean you should be breaking through these achievable goals constantly. If we think a little about the psychology behind setting goals, the main driver is actually competition. Now, believe it or not, competition drives most of what we do as humans. This is because we are innately social creatures. Now, while there are many pros and cons to competition, the main thing is that it holds people accountable and it tracks your progress against others. I talked about this before, but you should be comparing your stock portfolio to not only your peers and Wall Street analysts, but you should actually be comparing your stock portfolio to a company like Apple's stock. And again, the importance here is that if you can't beat Apple's stock performance over a year or 3 years, it's time to just put all your money in that one stock. Because yes, in the stock market, you will make money, and the only way to track your progress is to see the entire landscape of all the other stocks and see how they're performing compared to your performance. And again, it's that competitive drive that keeps us going and keeps us reaching our goals. So in short, I want everybody to make goals for themselves in the stock market and break through those goals. Stay frosty, Rebels. Rebel Leader, over and out.